The ones that bring the stock market up are going to be the ones that bring the stock market down. There's no way that Google can drop below $100, but you guys have to make those assumptions for yourself. That's just how it works. So Google reported last week, and now the question becomes, has the landscape changed? We're going to go through Google right now. We're going to see what's going on. This stock price is at $107. And for those of you that didn't think that Google could fall below $100, I remember when this was at $150 a share, saying, I can't wait for Google to get below $100. There's no way that Google, the company of Google that is so involved and ingrained in everybody's lives, can drop below $100. Well, just recently, just in November, it was $83.34. $83.34. And I firmly believe it will get back there. Why? Because you have these big players in the market, Meta, Apple, Google, Nvidia. They have driven the stock market up. The ones that bring the stock market up are going to be the ones that bring the stock market down. That's just how it works. So let's take a look at this thing and what we have going on with Google. Phenomenal company. Cannot wait to own them at some point. And the one thing that is super impressive to me is their market cap and their enterprise value. $1.35 trillion market cap, $1.34 trillion enterprise value. And if we refresh this later today, they could both be 1.35. This is one of the companies that's notorious for having the same market cap and enterprise value, which is absolutely amazing. Gross margin over here, 55% with a profit margin of about 21%. This is a company that knows what they're doing, and you know how I know management knows what they're doing? You come over here to the 5-year return on invested capital, 14.5%. For those of you that look into these mega cap companies, and this is what I do, we don't have the opportunity to talk to Sundar Pichai, to Tim Cook, to anybody, even CFOs, whatever, in these companies. But what we can do is look at this return on invested capital number and say, hey, how is this company? How are these CEOs? How are these CFOs? How are they at allocating capital in different areas? And to me, when I see high returns on invested capital, here with Google, 14.5%, when I see with Apple, over 35%, that I know that management does know what they're doing. And that is something that's very important to me for creating that runway long term. Because Google right now, if I look at this and say, okay, it's a $1.35 trillion company. It's $107 a share right now. Its 5-year PE is 27. I look at this saying, how many times can I multiply my money with a company like this? It's going to be much easier for me to go after a company that's $25 billion and come up with some type of big multi-bagger opposed to a Google. So I need to know, can they create this long runway? Can they add asphalt to that runway going out for me to have a good return on my investment? And that's kind of what I look at when I look at companies like Google. They need to be able to reinvest in themselves and generate money that way, because the growth is not going to really come from what they had done the previous decade in Google's case. So let's see what we have with the 8 pillars here. And right after this, I want to look into some bear and bull cases for Google, because there are bearish sides to Google, but there's also bullish sides. Let's see which way they go. So looking at the 8 pillars, and remember guys, if you want to try this software and get the 8 pillars, or more importantly, customize your own pillars, there's quadrillions of different combinations that you can do here. We're running a special, $7 for 7 days. Come and try the software. You'll get the 8 pillars. You'll be able to create your own pillars. Try it out for 7 days. You'll get Stock Analyzer tool, which we'll do in a little bit. Try it, join the community, you'll love it. There's thousands and thousands of people up here that talk about Google every single day. So when I look at these pillars, I look and say, return on invested capital, check. Shares outstanding. Don't necessarily love that they're buying them back. I will love them if they've been buying them back maybe recently. But again, a company like this with so much cash, what exactly are they supposed to do with their money? They have to be able to reward their shareholders in some way. So they return them with high return on invested capital, allocating their money correctly, and they don't pay a dividend. So what are they going to do? They're going to buy back shares. That's how they can help shareholders. Debt, no worry there. They can pay off their long-term liabilities with 5 years of free cash flow in less than a year. 0.84 years, that's what that means. Revenue growth is there. I do want to look at their revenue growth. I do want to look at their cash flow growth and make sure that we don't have to come back to some crazy COVID spike, but we'll take a look at that in a second. The only 2 things that really get me here are their 5-year PE being 27, which maybe that's a good price to pay for them. 5-year price to free cash flow, 28.5. Maybe I can justify these prices, but we'll find that out in a second. Now let's go to the income statement and look real quick. So let's go back to 2019. They did $142 billion in revenue, 166 in 2020, So that's let's just call it a $40 billion jump to use whole numbers, $30 billion jump here, and then a $70 billion jump. And you can see they didn't continue that trend forward. They actually only jumped about $14 billion here. So what I'm saying right now is maybe Google is going to come back to life a little bit, or come back to reality a little bit. Maybe they're going to go to do 270 billion in the next year, and maybe 230 billion. Is that a bad thing? No, I just look at it saying there was a big jump from 2021 to 2022. Maybe that's not sustainable. They'll grow into that, I'm sure, but maybe it's not sustainable because the jump was so big. Let's look at their profit margin real quick. So looking at their net income, here you go. 34 billion to 51 billion to 75 billion. There was that big jump. And now they're back down to about 59 billion. So profit is coming down. We do know that ads are becoming more popular again. After you had the big COVID spike, ads shot up. People were spending like crazy. Then you had this little recessionary environment. Ads came down. Now they're coming back to that growth phase. So that's kind of the ebb and flow that you have to look for. All right, let's look at some bear and bull cases here for Google. So let's start with the bearish side. Google holds 85.5% of market share when it comes to search engine. And Bing is in second. Bing, this company that's supposed to be great with all of this, they're coming on the heels of Google. They hold 8.23%. So I think they have a pretty strong hold in the market right now. Could that change? Absolutely. But you have two of the biggest search engines in the world. The two biggest, Google.com and YouTube. You're watching this on YouTube. It's going to be very hard for Bing, even with ChatGPT, even with Microsoft investing in them, and NVIDIA getting involved with them. It's going to be very, very difficult going forward. All right. Paid clicks increased 8% on user devices. That's a big number. That's a very big number. During the quarter ending in March 31st of 2023, they repurchased 15 million shares at a reasonable price of 21 times earnings. And that's what I said. When we go back to the income statement, I was saying, okay, what is going on with shares? Are they buying them back now, or are they buying them back previously? They're buying them back at 21 times earnings. I like that. I really like to see that. Now, on the bear side, total ad impressions are down 5% due to currency, exchange rates, yada, yada. That's not really anything for me because I look at this long term. Sure, that's a bear case in the near term. But when I'm looking out, that's like saying that interest rates are going to affect my investment decisions. I'm sorry. And inflation, it's not going to happen. All right. AI Bing software integrated essentially all modern Samsung Galaxy devices. I could look at that as a bear case or bull case. That one really doesn't do anything for me, but it was something that was pretty talked about when it came on to Seeking Alpha, Motley Fool, those types of areas. And that's what I like to do. I like to go to those types of websites and just see, what are people saying? I don't have to agree with them. They could be ridiculous statements, but I just want to see what the talk is going out there, guru focus, stuff like that. Let's see what the analysts have to say here. All right. $5.20 earnings per share at the end of this year. Pretty big growth, mid-teen growth. $9.68 in 2027, but you can see only 8 analysts at that time. So we'll see. I'll put it in the stock analyzer that way and we'll run it. Now, when it comes to the revenue side, we're probably having, I don't know, high single-digit growth going from 307 billion to 441 billion in a matter of 4 years. I don't know. I think that this is not factoring in any pullback in revenue, and that's what we're going to do right now. So coming over to here to Stock Analyzer tool. This was used 1.3 million times in 2022. I used this today. I think I've already used it 4 times, not including the videos that we've made today. I've ran through 4 companies and input my assumptions. This is a very valuable tool. Remember, $7 for 7 days sign up. So when we look at the revenue growth of Google, I'm going to go very low, and then I'm going to move it to high. So I'm going to go 3%. Yes, that sounds low, but if revenue has to take a couple of years to come down, then rebound, maybe that's what it averages out to. I don't think that that's going to be the case, but it's possible. Let's go to 6% and 9%. Those are kind of our low, probably not going to happen. Middle, most likely. 9%, they crush it. They do really well. There's our number. Profit margin, I'm going to go 20 in the middle, 23 and 26. I do think that the more ads that come on and the more they rely on that business, the more they rely on their cloud-based businesses, margins will increase. All right, free cash flow. Let's go with 20. And you know what? I'm going to go 20, 23, and 26 there too, because free cash flow and profit margins seem to fall in line. Let's go with 16, 18, and 20. And you might say, why did you put such a high PE on that 20 side? Well, for me, this is a moat. They have a high return on invested capital. And that's why we have return on invested capital right up here, because we want to remind you that this company has great return on invested capital. You might want to give them a premium for that. And to me, that's what I'm going to do on Google, especially if they can return 9% revenue growth with 26% margins over the next decade. And my return overall, 10%, 12%, and 14%. So I'm going to click Analyze here. I don't know what's going to spit this out. You can see it's on my watch list for 95. If this is all green, that doesn't mean go run and buy it. If it's all red, doesn't mean that it's overpriced. This is just based on the assumptions that I put in, and you can play with these all over the map. All right, so we have $68 on the low end, 119 on the high end, 90 in the middle. So we're pretty close, and that's why it's on my watch list at 95. I think that this is probably an $85, $90 stock, or where we're sitting. But you guys have to make those assumptions for yourself. Join the community, $7 for 7 days. Talk to people about it. It will benefit you. You guys have a great day.